Good afternoon, friends. I have big news to share with you this afternoon. The Federal Reserve is now poised to pause interest rate hikes very soon. This could mean several things for the American people, including some inflation relief. Several top economists are pushing for the Federal Reserve to follow a different plan to address inflation. So today, I'll be going over what this actually means for retirees and seniors. So do make sure, friends, that you watch until the end of this video. Also, in just 2 days, I will be announcing more winners for the Walmart gift card giveaway. If you would like to enter these weekly giveaway, friends, all you have to do is click and like several of my videos and then comment below the keyword of each video that you watch. The more videos that you watch and then comment on, the greater your chances, dear friends, of winning the giveaways. U.S. consumer confidence worsened in April as Americans became more pessimistic about the job market. The Conference Board's Consumer Confidence Index, which measures attitudes towards the economy and the job market, fell to 101.3 in April, marking it the lowest level since July 2022. The Business Group's measure of economic expectations fell in April and has remained below a threshold that's associated with a recession. Consumer attitudes have held steady since the turbulence in the banking industry last month, but high inflation and economic uncertainty have continued to weigh on consumers. That matches government figures, showing the labor market has begun to show some cracks. Employers added 236,000 jobs in March, which is the smallest gain in nearly 2 years, and job openings fell below 10 million for the first time since May 2021. Large companies and corporations have continued to announce layoffs. The April survey showed that worries about the economy slipping into recession persisted last month. Economists, including those at the Federal Reserve, expect a recession later in the year as the Fed's rate hikes take a deeper hold. The share of consumers expecting more jobs to be available fell to 12.5% in April. That is down from 15.5% in March. Following 9 rate increases since March 2022, the Federal Reserve seems close to pausing its rate hikes. Many economists believe the Fed will deliver a last 25 basis point rate increase at its next meeting on May 3rd, and then pause the rate hikes. This would be a welcomed relief for Americans on several fronts. First, it would mean that the Fed is confident that inflation is continuing to cool off, translating into lower prices for everything from rents, mortgage, utilities, food, and cars. In addition, lowering rates could also mean that borrowing costs could become cheaper than it is currently. Speaking at a press conference following the Federal Open Market Committee meeting, Fed Chair Jerome Powell said that some officials had considered a pause in the days leading to the meeting. One factor that hindered the decision was the recent collapses of both Silicon Valley Bank and Signature Bank, which threatened to trigger a risk of contagion to other banks and financial markets. Several economists believe that the Fed should stop tightening and that the consequences of not doing so could be severe. For one, higher interest rates mean higher borrowing costs for consumers and businesses, so credit cards, loans, and mortgages have been much more expensive. Millions of Social Security recipients have spent the last year playing financial catch-up because of the hit they took from soaring inflation in 2022. Most Americans are still way behind, even with the 8.7% cost of living adjustment approved for this year. The situation might not get much better if the Federal Reserve decides to address inflation with a different plan. The Senior Citizens League, a nonpartisan advocacy group, estimates that average Social Security benefits fell short of inflation by about $1,054 from January 2021 to December 2022. The shortfall was mainly due to the 2022 COLA of 5.9%, which lagged well behind an inflation rate that hovered above 7% for most of the year. Average benefits in 2023 have only recovered about $179 in total since the start of this year. The 8.7% COLA increase has exceeded the actual rate of inflation in every month so far by an average of 2.6%. That amounts to just shy of $45 per month, based on an average Social Security benefit of $1,694. But as the Senior Citizens League points out, this cushion is entirely consumed by the $164 monthly Part B premiums that are automatically deducted from Social Security benefits. The financial impact has been considerable. A new Senior Citizens League survey of older Americans found a sizable jump in the number reporting that they have depleted retirement account over the past 12 months, from 20% in the third quarter of 2022 to 26% in the first quarter of 2023. That is the end of my daily stimulus update video for this afternoon. Thank you, dear friends, for joining me here and for being part of this community. I will be announcing more winners this coming Friday for the Walmart gift card giveaway. If you would like to enter the giveaway, friends, all you have to do is click and like several of my videos, and then comment below the keyword of each video that you watch. The more videos that you comment on, dear friends, the greater your chances of winning the giveaways.